Welcome back, everybody. Thanks for tuning in. And first of all, I've got to say I've not been making very many videos, obviously because I'm busy working, family, but I've been playing lots of Command & Conquer Red Alert. Since they've remastered the game, I sit down to make a video and I find myself playing online Command & Conquer like I'm a 11-year-old again. I can't, so let's move on to the chats then, shall we? So first of all, we'll look at Bitcoin, then we'll move on to Matic. But before we start, we'll have a look at the Bitcoin dominance, which, to be honest with you, has taken a tiny fraction of a hit. And it's not all that low, in all fairness. I mean, it could be a lot lower than this. It's not looking great. It does look like it wants to continue to maybe hit around 65. If it does, for instance, make it to its way to 65 or lower, then we're going to have a bit, I wouldn't say an alt party, but every time Bitcoin dumps, alts are going, and there's a bounce, then your bounce will be best off in altcoins. And we look at Matic, we can see that. We have a look at the way that it moved today. I mean, basically, the tether value is taking a hit, but sats are not looking too bad after all. So let's move on to the star of the show. So you can see my train of thoughts all over the place at the moment, and that is mainly because I've made my shorts and I've kept my XRP short on now. I closed a lot of my shorts the other day and reopened them and closed them again. So at the moment I'm flat. I'm not trading on anything apart from XRP, which I'm still shorting. So the other day, or should I say just yesterday, I did say that I thought the market was going to begin a downtrend. As far as I was concerned, you'll have a look at my videos a few days back, I kind of already said that we are in a downtrend, and it looks like that downtrend is continuing at the moment. The downtrend is going to be confirmed when we reach, a lower low, and at the moment the downtrend is only on a very small micro time frame, very small, only going back to basically the beginning of the month. So we've gone about 2 weeks basically of this downtrend, and we've got a trend line that I've crudely drawn in there that isn't really that relevant. It's a real mess. In fact, let me just tighten this up just for the candle bodies. It's not really a trend line, is it, to be honest with you? But you can see what I mean. It's basically to signify that we've got lower highs on the short-term time frame. Now, if I was to get rid of all these lines and everything like that, you could argue that what we are actually still looking at, to be honest with you, is a giant bull flag, and that could be the case. I'm not calling for absolute doom and gloom, but I am a little bit skeptical over Bitcoin's sort of time to moon. But I'll just put it out there. I think we're going to make another leg down from here to at least the 200 exponential moving average, which at the moment is around about 8,400. I'm not going to say that this is going to happen immediately. This will happen in incremental steps. Currently, we're still trending within a Bollinger Band and actually found support on the green 50 exponential moving average. So, in all fairness, it's not looking too bad. But if this were to break down, we'd have historical, more recent, I suppose, supports. See where this wick is around 8,900. That would be tested. If that breaks, then I would say that we're probably going to come back down to this level. And coming down to that level and trading beneath the green 50 exponential on the daily will give this time to start to converge in on itself, and maybe even form some kind of death cross. Now, there's more to this. I've not got the charts up, but if we looked at all the major indices today, all of them, from the FTSE to the Nasdaq to the to SPY to everything, if you had a look at all of them today, every single one of them was down. So, people thinking, and I know that a lot of you don't think this. My channel's not very big, but the people that generally do follow me are on my Telegram group, and they're not stupid, and we kind of understand that Bitcoin is very much tied into the financial market as a whole, and just by seeing this whole situation play out with the virus, we can see that it's absolutely tied in. All right, there's no decoupling. What I like to think of when I think of cryptocurrency, it's like an amplifier of the health of the market. All right. Now, lots of people, noobs I suppose, would argue that Bitcoin came out during the financial recession 2008 and rallied as a result. Of course it rallied. It started with a market cap of 0. All right, one Bitcoin was worth about 5 cents. When it was pumping out, people were buying pizzas with thousands of them. The market cap was tiny. It doesn't take much for people to start investing in anything with a very small market cap for it to suddenly start to rally, and then gain traction and continue to rally as the market cap grows and grows and grows and grows. Now, Bitcoin's market cap now is actually very big, and it's one Bitcoin is very valuable. Even at anything over $1,000 a Bitcoin is very valuable. So the market cap is big. So it takes a lot more for for rallies to be created, but it's also at this point now, unlike it was before, it's available for leverage. You can short it, you can 125 exit. That sort of thing only adds more value to the market cap. When you look at that market cap, probably a lot of that isn't real. A lot of that is borrowed, leveraged. It's not actually there. It's probably a Bitcoin that doesn't technically exist, paper Bitcoin. So in that respect, it's very much tied into financial markets now, and it moves with the market at this point, because you could look at it almost like a commodity, like anything else, or a stock, or even a foreign exchange. Bitcoin and cryptocurrencies are almost all three combined. When you look at Bitcoin, it is a commodity. It is not so much a stock, but when you look at other altcoins, they trade just like stocks. They pump and dump with the successes and failures of the blockchain providers that created the token in the first place. And then you've got all the trading pairs, so Bitcoins, Ethereums, Binance coins, basically creating a kind of a forex exchange. So it's all of those three in one. So it basically makes it very vulnerable to anything that's going on in the rest of the world. So the rest of the world looks to me like it's topping out. All right, and this move, I did anticipate this move on the Bitcoin chart alone, but when you're looking at the other charts too, if they are topping out right now, that could be quite scary, because they, like I said, generally speaking, most of them downtrended by about 2%. That's roughly across the board. Some were more, some were less, but generally 2% across the board, all major indices. So if they move 2% and Bitcoin moves 5%, it's amplifying those moves. Okay, I'm not saying we're going to have a big move like this. It would take another situation to occur for something like that to happen. But what we may start to have when you're looking at SPY or Nasdaq or any of those, but the big ones, the major ones, if they start to begin a downtrend of their own, and they continue to make moves such as 1, 2, 3, 5% in a day on a downtrend, which is what I think is likely to start happening soon as the economic reality kicks in for the global financial situation that basically we're looking, we're staring down the face of cliff at the moment. That will also do it with Bitcoin. Bitcoin isn't the Bitcoin it was in the last recession. Bitcoin is going to be tied way into all of those things, and yes, there's fundamental reasons why Bitcoin should hold its value. There's fundamental reasons why everything should hold their value, but they're not. And Bitcoin isn't going to escape that. People are going to be wanting to cash out their Bitcoin if they think it's going to go down, if they think they need some money to, and then they're storing it as like a what do they call it? A safe haven or a valuable commodity like gold. You're going to want to cash some of that out, aren't you, if you need it? and you want to cash it out before it starts to downtrend. And if it starts downtrending, just like everything else, you're going to want to cash in. You're not going to want to be holding that stuff. You want to get rid of it, and I think that's what's going to happen. I'm looking at all these major indices, and they're all topping out, and they're all going to start downtrending for good reason. The economy is slowing down. It's slowing down worldwide. Maybe not China, but who knows if China gets a second outbreak. Seems unlikely, to be honest, but it might do. The rest of the world is certainly, economy is slowing down. Now we're opening things up now because we have to. It doesn't mean that we're ready. It means that we have to, because a standstill economy is going to be more detrimental to the native population than any virus would. You know, if this virus takes out, what do they say, about 2% mortality rate, a deep depression is likely to do a lot more than that. And there'll be all kinds of other aspects that would come out of that. We're already seeing sort of riots on the streets for a variety of reasons. I think a combination of reasons, not just the political reasons. I think people have got too much time on their hands, too much internet, and not enough money. And I think all of that is coming to a head, and we need to open the economy up. So if this economy starts to fail because lots of people are out of work and things just get more and more expensive because people are breaking stuff, and the virus is killing more people, and we have a second wave and a third wave that may be even bigger than before, then yeah, nothing will be immune to that, and Bitcoin especially, because Bitcoin has already shown us how it's best friends with major indices and gold to an extent, but I think it's more tied into the financial aspect of a global economy than it is any kind of gold or commodity. Anyway, I'm moving off on a tangent there. Let's get back to the chart then, shall we? So we're just briefly, just a recap, because like I say, my other videos that I've made this last week have kind of all explained it, but we are resting upon the green 50 exponential, breaking down beneath there to the 200 exponential is where I would imagine we would find a decent bounce, and then seeing if we were rejected from that level. So that is, as of roughly today, 8,500. Breaking down beneath there, I would say 7,700, no problem. And then at that moment in time, we're going to have to reassess. We're going to have to look at the nature, at the health of the rest of the world economy, because we won't be able to trade this chart alone, blindly, like we like to in a healthy economy. We can't, because the economy is looking quite unhealthy, so we have to bear all of that in mind when looking at this chart. And like I say, you could call this a bull flag. You could try to call it a bull flag, but I'm calling it the beginning of a downtrend, and the downtrend has several opportunities to bounce and be supported on. 7,700 could be the bottom, 6,600 would there be the bottom after that, and if it wasn't for that, then it'd be 5,000, and if it wasn't for 5,000, we're talking 3,800, and if that breaks down, it could come all the way down to around about 2,000 or lower. Is that likely? It's not very likely, but the world economy, financial markets will let us know the general direction. Bitcoin seems to be downtrending first. If they begin to downtrend, Bitcoin will certainly downtrend. If Bitcoin decides it wants to bounce from here, we have this, what used to be support, which has now become resistance. If it were to do it today, we could make our way back up to essentially where we were the other day, 9,800 or so. If that were to break, then we have this descending trend line that we've been under for 2 years now, and if that breaks, then I will get my bullish hat on, I will keep my mouth shut, and I will ride these bull waves, okay? But until that happens, I'm bearish on this, and I might even be called mega bearish. These levels could quite easily be taken out and lower, because I mentioned it, I think, on my last video. What this is speculative damage. All right, so you'd see this on, like I say, all the major indices. I don't keep bringing it up, but that's basically what you see. So what happens is analysts and traders and everybody, financial forecasts, get projected, and there's panic selling, because this down here at this level down here, we're just using Bitcoin for an example, is the speculated damage that a coronavirus would cause. Now this obviously, it doesn't damage Bitcoin at all. It damages the rest of the market because they all buy things, sell things, they depend on each other. You start locking down countries and taking people out of work, then all those things will suffer, hence why indices suffered. Bitcoin suffered by default because it's not decoupled. So it's speculative damage, speculative risk, and came down to this level. Now what will happen if we begin to downtrend is that the economic reality kicks in, and if the economic reality kicks in, it may bring us down to where the speculated damage was, which was down at this low down here. So people speculate that the damage could be this bad. We bounce because at the time there was no fundamental change to the world. The change has now taken place. The economy is feeling the pain, and the economic reality of that could bring us down to these levels. Okay, that's generally how it works. Do not be surprised if we do come back down here, because that is, like I say, I mean, it was priced in, it bounced like everything else bounced for all the reasons, such as all the fake money that was being pumped into not just Bitcoin with all the tether, but I mean, we're talking about quantitative easing and low interest rates and everything that was pumped into the markets to try and keep them up. If we start to downtrend, it means that all of that has failed. There's no more magic tricks. Nothing else can be done. We have to face the reality of what is round the corner, which would be the economic reality of this pandemic. And that will begin to trickle down. It will trickle and maybe crash. And the reason I think that we, as a result of that, we would find lower levels than this bottom here is because we don't know how long that will go on for. We don't know how long this virus will be around. We don't know what other problems are around the corner. And that could cause serious damage to absolutely every asset. Everything. So let's step back from this bubble that we're in. This bubble that looks like a giant consolidation pattern in the first place. When you look at something like the Nasdaq, a SPY doesn't look like that. Bitcoin does look like that. So you could argue that we've been downtrending since December 2017. So anyway, like I say, it's not all over yet. We don't know. The economy could recover. Everything could be fine. But we could be, like I say, starting or just at the very start of a significant and serious and potentially troubling downtrend that could lead us to lower lows than we've seen on this large dip. Anyway, I'll leave it with you there. I don't want to scare anybody. That is not my intention. My intention is to tell you my analysis on this, which is always very vague and basic, but long term is how I like to look at things. Now, just a few other little bits that we've got. I mean, Ichimoku clouds are not the greatest on a daily, but we do have a cross at this level here. This price action here, we did get a cross, okay, which means that we're expecting a downtrend anyway on the daily, which could take a week to 2 weeks, 3 weeks, maybe a month, maybe 6 weeks, or something along those lines. It could play out for that long. Now, the opposite has happened with the weekly, where we've got complete opposite of that, showing that there should be an uptrend from this level here. Price action being above where we are or below, depending on which way you want to look at that wick. So mixed analysis as always, long term to super long term, but over the next few weeks I would expect a downtrend, and we've got to keep our eyes on the financial market, and that will give us more of an idea of what's going on. Let's have a quick look at Matic then, just for a laugh. It looks like it's dropped a little bit. We're on the 15-minute chart for some strange reason, but on the daily, let's have a look. So we've got supports and resistance. We're trending basically within a this between this level and this level. That's massive resistance. That's decent support. We're right in the middle of that basically. So do not be surprised if we come down to 2 cent. Do not be surprised if we wake up and we've rallied to to 2.5 cent. All of that is completely possible and plausible, and we do have an upward trending level of support that we might start to meet towards the beginning of next month, and that should hopefully cause the cause a bit of a push to get back into this level and break up above this level. But breaking down beneath 2 cent is going to be pretty tragic. And obviously, you know, when you look at something like Matic, yeah, it does do its own thing, but it's also tied into the price of Bitcoin, which is tied into the financial market. So this is one of those coins, like I say, that, you know, earlier on in the video, you know, cryptocurrency is like forex, commodities, indices, and stocks. You trade stocks on fundamental purposes. If you know someone's going to be sort of taking over a business or going bankrupt, you either go long or short appropriately. You know, if you get the information ahead of everybody else, that's how you play the game. So with Matic, you know, there was rumours of a Coinbase announcement today, so I think that's what's kept it relatively strong. And then we're grasping onto the fact that staking is going to be made available in about a week, which on its own shouldn't make it pump, but it should allow it to hold some value. If Bitcoin hasn't trashed everything by then, which it could have easily just trashed the market at that point, and it would trash Matic out of default as well. But you know, the fact that staking would be made available at that point should give Matic a bit more strength when it's making its uptrends, and less red to green ratio, you know, because the incentive to buy and hold these coins will be more enticing to people. But at the moment, it's a bit of a letdown. At the moment, we pumped okay, we pumped like 5%, but generally yesterday most coins pumped around 5%, so it's no big deal for Matic, no big deal at all. In fact, a bit of an underperformer when you look at some of the stronger coins like Chainlink or whatever. Anyway, I'll leave it with you there. I know that's not the best video I've ever made, nor is it the most informative, I imagine, because it involved a lot less technical analysis. But if you want to look back at my videos, I suppose over the last few days, you'll get a bit more TA on the situation. And like I say, that's how I managed to anticipate this. I've been waiting for this actually for quite a little while, and I do expect it to continue for a little while longer. So I'll leave it with you there. Thanks for watching. I hope you have a nice evening. Take it easy.